Good afternoon, everyone. Good afternoon, good morning, good evening from wherever you're joining me from today. I'm happy to have you here, and then it's great to be connected to you all again. I hope you all are making money and smashing your targets in the market. Yeah. So we're going to be giving a grace period of about 10 minutes, between 5 to 10 minutes, to our other friends from around the world who are yet to join us this day. Okay, some people are used to coming late to everything, even on their wedding day. It's possible they get there late, right? But we will, for their sake, hold on for another 5 to 10 minutes. So once is 12:10 on dot, because we have quite a lot to cover, and then also in a very short period of time, because I have quite a lot of things to do with some of our VIP clients. Okay, so I will want us to be as brief as possible. We had an introduction about 3-4 weeks ago, so this is more like a continuation or just a recap, and then re-stressing certain things that you need to be successful trading gold as an asset. Okay, and just like I said, welcome again, and then let's just hold on for another 10 minutes. Thank you. You're all welcome. You're all welcome. Welcome to the Yellow Metal Mastery session with myself, Samuel. Okay, some people call me RSI. And then it's great to have you all around for today's special strategy session on gold. You know, in the last session, I shared my story on how I had made a significant loss trading this asset. Okay, we have started already. I'm just holding on while I share this short story with those who were not around the last time we had this session. Okay, I shared how that I lost a significant amount of money trading gold at a point, and then I vowed to myself that, okay, after a lot of depression, after a lot of what's it called? After a lot of crying, felt like everything was going to crumble on me, you know, but here I am standing and still talking to you about the same gold, right? So tells you that you can fall 7 and you can still rise again, okay? But you need to know why you fell in the first place. Unless you keep falling, then you can keep falling into the wrong. Okay, I don't want to say fall into the grave, but it can happen, right? So, but anytime you fall, anytime you maybe take a loss, maybe you blow your account, you need to find out what happened. What did I do wrong? What am I doing, or what do I still need to do? And then one of the things we're going to be addressing on today's session is uh the psychology that you need to trade gold. Okay, we're going to be addressing the psychology that you need to trade gold. We're going to also be addressing the fundamentals that drive gold. And then I will be sharing with you a simple technical strategy that you can use to trade gold and make money for yourself. Okay, intraday strategy basically. So it's for day traders. But you can apply the same as a swing trader, just the same concept. We'll be looking at more as to what we'll talk about. Okay, so but welcome again once aboard. We have started. I'm happy to have you all here. I think we are up to 43 currently of us are on this call now. Good. We're expecting more people to join as the time goes by. And like I said, my name is Samuel, and then I am your host today. You can also call me RSI. All right. So in the chat or in the chat, just let me know if you can hear me clearly. And then you can just let me know from where you are joining from. If you're joining from Nigeria, Lagos, Nigeria, you can say that in the chat. If you're joining from Cameroon, if you're joining from Ghana, if you're joining from Tanzania, if you're joining from the UK, wherever you're joining from, let me know in the chat. I want us to drop that in the chat. Very good. Kaduna Delta, very good. Rise from Ghana. Love you, Rise. Good to have you. Edo, I can hear you loud and clear. Lagos, awesome. Ibadan, Port Harcourt, Asaba, Lagos, Kaduna. I think we have a lot of Kaduna people around today. Oh, nice. Nairobi, Kenya, Badide, right? Cameroon. Very good, very good. Oyo, Lagos. All right, so we're starting already. UK, London, fantastic. We are starting already, and my name is Samuel, and then I will get into our main focus for today. So what we will be covering on this session is the psychology that you need to trade. You know, one of the major things that I have discovered or that we have discovered here generally in trading is that there are three things that make for successful trading in the financial market. Okay, there are three major things that make for successful trading in the financial market. And the first of them is knowledge. The first of them is knowledge. The second of them is capital. And then the third is the mindset, the psychology, the discipline that comes with trading. Okay, so I'm going to be addressing the third issue. And then in the process, I would also talk about the second and the first issue, which is knowledge. So what we have come here is to gain knowledge. I want to become a better trader. I want to trade gold. I want to master gold. Gold is the most traded asset in the world. Gold, when I trade gold, I have found out, okay, that I make more profit. But every time I also lose, gold takes away all my profit. It takes away all my capital. It takes away all my funds. So what am I doing wrong and what am I doing right? What do I still need to do to be a better person or a better trader as such? Are you with me? Very good. So we're going to be considering what the psychology of trading is all about. And then I want to ask us this question. Okay, are you a good trader or are you a good analyst? Are you a good trader or are you a good analyst? I want to see our comment in the chat. Describe yourself. Are you a good trader or you're a good analyst? You know who a good analyst is? A good analyst is someone who has his trading view or his MT5 platform, and then he does a beautiful analysis on gold, for instance, and says, if gold gets to 3,150, I expect the sellers to kick in from there, and then price should drop as low as 2,800. Now, that's an analysis, right? And then it plays out, but this person never makes money from his analysis. That's a good analyst. And then I believe so. We have so many good analysts, and we have few good traders in this financial industry. So many people can talk. They can give you what will happen in the next 3 weeks on gold. They can tell you what will happen on Bitcoin. They can tell you what will happen on any asset. They have the ideas. They have the knowledge, but they don't make money from it. Don't you think that is like a curse? Or that is like a problem with many people? I don't want to be a good analyst only. I also want to be a good trader. So a good trader is someone who doesn't just sit on his chart and anticipate or talk about price changes. He is also someone who is actively engaging the market with capital, with his knowledge. Do you understand? So I want that person on this call today, if you are on this call today and then you have been a good analyst for 3 years, you have been a good analyst for 6 years, you have been a good analyst for 1 month, for 1 year of your trading, and then you have not been consistently making money. Guy, this is a time to change. Okay, this is a time to what? Change. Don't be a good analyst. Be a what? Be a good trader. Be a good trader. Now, talking about psychology, talking about psychology of trading or needed in trading gold. The first thing I want us to pay attention to is control of your emotions. How do you react when you win a trade on gold? How do you react when you lose a trade on gold? How do you react when there's a high volatility in the market? You know, it's easy to talk, but when you are in the do, it's always very, very difficult. And then I've discovered that people who trade gold majorly are people who trade gold unprofitably. Yeah, that's the term. People who don't make money when they trade gold are people who have no control over their emotions, because gold is actually profitable and then it offers higher volatility as against regular currencies and against regular assets. But at the same time, it is very, very dangerous. Dangerous in the sense that if you don't have a control over your emotion, you will find yourself jumping in and out of trades. For instance, you know what we call trigger happy. When they say a cop or a soldier or a policeman is trigger happy, he's just pulling his trigger on the gun as he pleases. That's been trigger happy. A trader too can be trigger happy, can be trade happy, such that because I took a win on gold now, I feel like the next opportunity or the next candle that forms, this should happen. Without waiting for my strategy to play out, I am in another trade. Okay, now, or better still, it happens that you had just taken a loss, okay, and then you want to go back into the market and revenge trade on gold. You will bite your fingers. You know, one of the things you will face as a trader is the urge to revenge trade after a loss. You would face that temptation to over leverage. when you feel like you have won and you're confident, oh, this is a A+ setup. Let me use 2 standard lots as against my 0.5 that I've been using. When do I want to even when do I want to buy my car? This is how I'll buy my car. But you forget that this is what capital size you're trading, and this is the risks that you should apply to that particular capital size. So if you keep going back into the market by over leveraging when you're confident, or you are trigger happy and then you keep clicking on trades because you are afraid of missing out, you will find yourself constantly losing when you trade this asset called gold. The market does not care about your emotions. We used to say here that the market is not your father's property. It does not care about how you feel. It doesn't care about what you have made or what you have not made. The market does not care about what you've lost. The market will be the market, but you must align yourself by what? Sticking to your trading plan. Avoid chasing price. Many traders, this thing, won't you trigger my sell limit? Won't you trigger my buy limit? Why is this thing going away from my entry? Let me enter small position here. I will enter the remaining if it comes back to my entry. You are cheating on your progress. Because at the end of the day, that trade would come back, and then when for some reasons it even comes back and then doesn't go in your direction and takes your stop loss, you would lose more. Right? So you have to avoid chasing price, especially when you're trading gold. You have to have a strategy, which I will share with you, one that works today. And then you must be patient and disciplined. This is what I'm waiting for. This is what I want to see. This is what I want to trade. If I don't see it, I am not placing a trade. That's the discipline of trading. If you don't get to that point, I see traders make excuses, but it's just you're not ready to make money. People like that, I don't pay attention to them. You're not ready to be profitable. Okay, if you keep making excuses, you would never get far in trading. Do you understand? So the idea is, if you want to be strong mentally, first of all, learn to control your emotion, the emotions of fear, the emotion of greed. Okay, you need to have control over those, because when you are a better person and you have a better control over your emotions, you will be able to stick to your plans, and then you avoid chasing price, and then you will be patient and disciplined. You will be what? Patient and disciplined. When you're patient and disciplined, that's when you begin to really understand yourself, and then you really begin to make money. Patience in waiting for high probability setup, discipline in sticking to your rules. Those are the things that matter. Those are the things that matter when it comes to psychology of trading. And because of our time, I don't want to really stress this. I'm going to quickly talk about what really drives gold as an asset. What drives gold as an asset? What are the fundamental drivers for gold? What moves the market, or what moves the prices on gold? Now, I will have highlighted a few things here. Okay, I've highlighted a few things here, but for the sake of this class, I'm going to be focusing on one of them, which is the interest rate and the monetary policy. The interest rate and the what? And the monetary policy. So for the sake of this class, supply and demand affects the prices of gold. Okay. Apart from supply and demand, we also have interest rate and monetary policies that affect or drive the price of gold. We also have inflation, okay, that drives the price of gold as well. Okay. And then we have economic uncertainty. Okay, these are the things, and geopolitical tension, like we saw with Russia and Ukraine in recent times, and then also like we saw with Israel and Hamas. Okay, in recent times. So these kind of things, they tend to drive the market. They tend to drive the market, and they tend to create high volatility and opportunities for traders to make money. Okay, don't worry. We're not going to have any all talks. We're going to go into our chat shortly. I know someone is wondering, did I come here to listen to a lecture? Right, you're not listening to a lecture, but I want you to understand first the foundation, okay, of what moves the market. When you know what moves the market, and then you follow the news. Some traders, they don't even read their what's it called, economic calendar on Forex Factory or on investing.com or wherever you check your Forex calendar from, right? And then it's bad, because you can place a trade today, but on that particular trade, there has been a news or a fundamental that has been released maybe hours before that this is going to be happening. Oh, Fed Powell is going to be speaking, and then there's expectation that he's going to be speaking, or there's expectation that they're going to be cutting rate, or there's expectation that just something happening in the market, forecast being given, and then you can position yourself in that line to actually make money using that forecast. But many traders don't pay attention to the fundamentals, and then it's not good, especially if you're trading an asset like gold. Okay, so here is one of the major drivers: interest rate. Interest rate and monetary policy is a major driver for gold. Okay, it's a major driver for gold. The US Federal Reserve, September 18, 2024. Okay, now the expectation in September 18, 2024 was that rates would be reduced by what? Only 25 basis points. But for some reasons, rate was reduced by a 50 basis points, which was higher than what? Expected. Now, when interest rate cut happens, okay, and then it is also higher than the expected value, okay, that traders or investors or banks are expecting globally. It affects the market, and not just the market, it affects the asset called gold. Now, this announcement triggered what? A rally in precious metals, gold including. Okay, it triggered what? A rise the prices of gold. So, the beautiful thing about today's class is next month, September, okay, during the FOMC Federal Reserve rate meeting, we are expecting a rate cut as well. So it means you are currently in an opportune time where you can position yourself as a trader to leverage on what will happen in September. Donald Trump, the president of US, has been screaming, "Oh, Powell, you are slow. You are not moving fast. You're this, you're that. Let rates come down." And now analysts are predicting that there's a 94 to 96% chance that rates will be cut in September. And then if rates cut, the gold rather, will rally. Okay, because people will take their money out of interest yielding assets and put their money in what? Other assets. And then other safe haven assets like gold will find more attraction when rates are cut. Do you understand? So this is what is going to happen in the next few weeks, few months from now. Watch out for gold. Gold has risen as high as 3,005 this year, correct? But expect price to retest those highs and maybe even create new highs. At the beginning of this year, expectation was that gold will rise as high as $4,000 per ounce. Okay, so we are still above 3,000, correct? And then we are still expecting price to respect that 3,000 mark and continue to push up. So if you're a trader, this is long term. If you're an investor, this is long term. You can leverage on this. You can what? Leverage on this. That's free information I just gave you there. That's free information I just gave you there. So like I was saying earlier, rates are going to be cut. Expectation next month. So what are we expecting? Rally in the price of gold. Rally in the price of gold. When you go to the chart for gold, let's go to the chart of gold. Where's it here? Where's it? Okay. This is not gold. Okay. Look at gold. I hope you can all see my chart. Okay. This is gold. In the last since April, okay, where we saw that high, gold has been ranging. Look at the weekly time frame. Gold has been what? Ranging. Look at, there's not been a lot of push. There's not been a lot of activity as such. Of course, there have been activity on the lower time frames, but you will discover that it has not crossed this range since then. It hasn't crossed here. It has just been here, right? That's just been there. No major higher time frame, maybe higher highs or higher lows, structural levels being taken out and all of that. Has just been plain. Okay, but I am expecting that this is my own prediction, that with the rate that will be cut come September, okay, this asset can rally and take off these highs. potentially these highs. I hope you can see my cursor. If you can see my cursor, let me know in the chat. Potentially take out these highs and then retest this last high, this which was the most recent high that we saw in the market, right? Okay, so that's the expectation. So, but how do you get into this market as a trader? How do you leverage on this information that I've given to you? And how do you take advantage of this? I will share with you in my coming talks. But before I go into that, I wanted to talk about capital and what you need to trade effectively. You know, I've had people say, "Oh, I'm a flipper. What I like to do is take $20 to $5,000," and then I'm like, you know, it's not bad, but it is also bad because with that amount of money, you're putting a lot of responsibility and pressure on yourself. And then if you do that as a trader, there is a 90 to 95% chance that you're going to be losing your capital every time you do that. It's the truth. It's the truth. Because if you don't first have sufficient funds to engage the market, okay, you will keep losing those 50, 20, $100 that you're putting in the market, thinking, oh, I can take it to 5,000. Then after it has gone to 5,000, then I will withdraw 4,000. Then I would, people plan stuffs in their head, imaginary stuffs, which is good. Okay. But at the end of the day, it would not always turn out that way. You will get the disappointment at the end of the day because I can tell you for a fact that it is like farming. Trading is like farming. If a farmer wants to feed a nation, will he plant just 5 seeds of maize? Answer me in the comment section. Trading is like farming. If a farmer wants to feed a nation, will he plant 5 seeds of maize and say, "Oh, with these 5 seeds of maize, I can feed the whole of Nigeria. With these 5 seeds of maize, I can feed the whole of Cameroon"? No. If people are doing commercial farming, they want to feed nations. They are planting millions, in some cases, billions of seeds. Correct? Because they know that from these billions, we can get 10 billions or a trillion, possibly. Okay, that's how trading is. I see people, I'm like, you're not ready. I don't even talk to them. People that don't have sufficient capital, I don't talk to them. Why? Because I feel like you're not started yet. You're just gambling. You're just playing around. You're just playing around. It's not possible, right? It's not possible. So you have to treat trading in that mindset as well, like farming. You need sufficient capital to engage the market. And then I said here in my slide that $1,000 with proper risk management, brothers and sisters, is better than putting pressure on $50, hoping that things will turn out, hoping that $50 will be one day become $2,000, $3,000, $4,000, $5,000, $10,000, $20,000. The chances that that will happen, I've said it earlier, is almost zero. Almost zero. In the process, didn't you factor the losses into it? And then even if you are trading $50 with proper risk management, how much can you sufficiently make that can sustain yourself? In Africa, even globally, where inflation is driving many people back into poverty. How much? How much? Think about it. Think about it. Do you understand? So don't sit down there and join the wagon of people that say, we feel flip them now. No, don't have that mindset that in order to be successful in this business, you need sufficient capital. And then if you need to have sufficient capital, you will find yourself closer to your goal than you have ever imagined or thought of. I saw a particular trader, okay, and then for your information, let me make this clear to you. You know that I can be trading a $50,000 account, okay, and you can be trading a $1,000 account. Are you with me? I hope you can hear me clearly. Let me know if you're still following me in the chat in the chart. Let me know if you can hear me loud and clear. Just drop a comment. I can still hear you. I'm following you. Anything you want to talk about? Yes. Thank you, Esther. Thank you for following. Very good. Loud and clear. Miss T, Ifeanyi, Steven, I see you. All right. It means everybody can hear me. It means everybody can hear me. So I'm saying that I can be trading. Okay. If I'm trading a $50,000 account, for instance, okay, and then for whatever reason, let's say I'm using a 5 standard lot. Okay. You know, if I'm using a 5 standard lot, it means that for every pip movement in my direction, I am making $50. Are you with me? Who is following me? Very clear. Now, if I'm trading a $50,000 account and I'm using 5 standard lots, every pip movement in my direction is $50. Okay. If you are trading a $100 account and then every pip movement and you're using a 0 point, let's say you like taking risks, let's say you're using 0.05. Okay. Every pip movement, 0.05 in your direction, you're making just $0.5. Now, if the market moves 20 pips in your direction, I want to show you the importance of capital size. If the market moves 20 pips in your direction, you will make what? Just $10. $10 possibly can buy you a lunch in Nigeria here, right? It can buy you a lunch, but it depends on what your lunch is. For some people, $10 is nothing. You cannot buy them lunch because what they eat is bigger than $10. Okay, right? So, but at least for a middle class, $10 can buy you a good lunch in Nigeria, correct? But I'm trading $50,000, and then 50 times 20, I am making $1,000. Now, $1,000 here in Nigeria can probably you know, it can do some things, not all things, but it can at least can make you go to the spa, maybe have a nice session in a nice hotel, and then eat some continental dishes. Okay, that can do some good things, isn't it? It can, yes. So what I'm saying to you is capital size matters. We can both be making $20, catching 20 pips every day in the market. But you are still living like a church rat. But me, I'm living like the boss and landlord of Lagos. It's different. So you have to think in that mindset. You have to think with that mindset. Let that sink in because it's very, very important. Okay, now let's quickly go into the chart. All right. And then I'm not going to spend a lot of time here because I'd gone over this in the first class. Okay, if you want to understand this better, you can go back to the first video we had. Is available on YouTube. Okay, you can search for 10 Trade on YouTube. You're going to see series of sessions that we've had, especially this one. You can check it out on YouTube. But I will go over what has been happening with gold in the last few weeks and the opportunities that we have leveraged on in the last few weeks on gold using this simple strategy. You can take a screenshot of it. This is what should be your focus every day you come to the market now. Oh, I want to be a better trader. This should be your focus. Oh, I want to be a better trader. Screenshot this. Write a note. This is your plan. I'm giving you a plan now. So there's no more excuse for being unprofitable. Okay, now the first concept is market structure. Very important. No trader is ever truly successful if they don't understand market structure. I've not seen that trader. I've not seen them that they say, oh, when I just look at the candle, I just say, it will buy, and it clicks buy. You are a gambler, my friend. You will lose badly and go back to your village. Okay, you need to understand market structure. And what market structure informs you as a trader about is directional bias. Should I be bullish now or should I be bearish now? If I am going to be bullish now, it means based on what I'm seeing on my chart, the bias are in play. If I'm going to be bearish, it means based on what I'm seeing on my chart, the sellers are in play. Okay. And then for the sake of this strategy, I am going to be focusing on the 1 hour time frame. Okay. Because we are mostly intraday traders and then also scalpers. Okay, now the next thing I want to do is I want to identify premium and discount zones using my Fibonacci tool. I'll show you all of this on the chart. So you don't need to worry. Just take a screenshot or take a note of it. Okay, now once I have identified my premium and discount zone using the Fib tool, then I will then identify what I call an order block, okay, or a fair value gap, FVG, within the premium or discount zone. Do you understand? So I will talk about it. Don't worry. You just take notes. You just take notes. I'll give you a live example of all of this. Now, once I've done this, I will jump down to a lower time frame of either 3 minutes or 5 minutes, okay, and look for lower time frame break of structures. Now, what I mean break of structure, I will show you also on the chart. Okay, break of structure is just like market was bearish before. Now it has turned bullish. So there was a break of structure that took place before the market turned bullish. Now, then I will look for entries on the retest of the 3 minutes or 5 minutes FVG or OB. This is simple. Trust me, this thing works like water. Okay, did I say works like water? It works. Well, water works. Water is a good therapy, right? So it works. Good. So let's go into our chart very quickly into our chart. Now, the first thing I want to establish is market structure. If you're here, you don't understand market structure, right? You probably will need to take a special class. Okay, but this is market structure 101. They are generally there are, what's it called? There are three structures in the market. There's what we call the bullish, okay, where buyers are driving price upward, and there's what we call the what? Bearish, where the sellers are in play. They are driving price what? Downwards. Okay. Now, we also have this ranging market, right? Where market has no specific direction, like we have on gold currently, right? As you can see here, no specific direction. Market has what been ranging, right? So, but we're going to come into that later on. We're going to come to that later on. Now, these are the major three structures, okay, that we have in the market: a ranging structure, a bullish structure, a bearish structure. Now, if market is moving upwards, as a trader, I want to be looking for what? Buy opportunities. As you can see here, structure was broken, right? Structure was what? Broken, right? And structure was what? Broken to create new highs. So this is a low, this is a higher high, this is a low, higher low, higher high, higher low, higher high, higher low, higher high. Correct? And then from every reversal that we saw what? A pump. It gives you an idea that there's something about the bias in this market. A reversal, okay, a correction rather, and then another pump, a correction and another pump. Same applies to the bearish market. Okay, if you've been a trader for a while, you already understand what I'm saying. But if you're new to trading, this is not a class for beginners, and a class for us to begin to talk about all of this. You can meet your account manager for more information on what to do if you haven't been a part of this concept, or you can watch the YouTube video that I talked about earlier. Okay, so this is generally bullish market. This is generally bearish market. Now, in a bullish market, I'm looking for buys, but where do I buy from? That's the question. Entries has always been a problem. How do I buy? Where do I look for buys from? And where do I look for sells from if I'm in a bearish market? I have identified, let's say for some reasons, I came to this market and then I saw that price was here. Right? I saw that price was just here. Okay, now I've seen two higher lows. It tells me something. The market is what? Bullish. Abi, what else do I need to see to know that this market is bullish? Nothing. I just need to see that higher highs have been created. Also, higher lows have been what? Formed. Right? And then if I see that, I know we are bullish. Now, if I see the market somewhere here, what do I do? Based on our strategy, I said you come to what? Identify the market structure, directional bias, which we have just done. Market is bullish. Why? Higher highs and higher lows. Market is bearish. Why? Lower lows and lower highs. Correct? Simple as that. Then second thing is do what? Identify premium and discount zone using Fib tool. Okay, now let's go back to trading view. This is what? Our Fibonacci tool. This is what I use. You see, everything is not labeled, but I know what everything is. Right? 0, 50, 100, 0, 50, 100. Okay, 0, 50, 100. 0, 50, 100. That's what I use. I don't use orders, right? Because I'm interested only in what's happening here, right? What's happening here and what's happening what? Here. Now, this area is what I call my discount. Okay. And this area here is what I call my premium. Are you with me? Do you understand? I hope you're seeing this. Good. So that's the premium. Premium is 100 to 50. Discount is what? 0 to 50. Why is it discount? I want to buy at the lowest possible price and I want to sell at the highest possible price. That's simple business studies. If you went to GSS class, you don't want to sell above or below rather your cost price, and then you don't want to buy at a price that is higher or too expensive. It's simple logic. Okay, for instance, now, I don't know if they do it in Ghana. I'm sure they do it everywhere in the world. They exchange currencies to dollars. Okay, I know they do it everywhere in the world. So you want to, for instance, maybe you're using an app and then the exchange rate is 1,540 or 560 thereabout, right? And then you want to change Naira to dollars, but you have information now that in the next 3 months, the Naira to dollar rate would be maybe 1,900. Just saying, I'm not saying that's what's going to be. Okay, now based on that information, you're holding currently $100,000, right? But you now have information that in the next 3 months it's going to be 1,900. Are you going to sell your 1,000 at 1,540 currently and then say, I need money? No, you will go and find money to borrow, and then you say, this $100,000, let me keep it till when it's 1,900. Even if it's not 1,000, even if it's 1,800, I will still make some gain. Yes or no? So as a trader, I'm looking to buy at the best possible price and I'm looking to sell at the best possible price. The best possible price to sell is my premium price. The best possible price to buy is my discount price. Simple as that. If you know this, you're closer to profit. Now, on this chart, this is Fibonacci. You pull it and you drop it, right? So you're pulling it from the swing low to the swing high. Okay, and then you're expecting what? A correction so that you can look for what? Continuation to the upside. But if I'm in a bullish market, I am only looking to buy in discount from a discount zone. And if I'm in a bearish market, I'm only looking to sell from a premium zone. Let that be a foundation for you. Write it down if you need to. Now, I'm only looking to buy what? Here. I'm selling. Okay. I'm only looking to do what? Sell here. Premium. Correct. I hope you're following me. Now, this is simple. This is what the strategy is based on. Now, on the 1 hour time frame, this is what you're first of all doing. I have established that you need to understand the directional bias. Once you have understood that, use your Fibonacci tool. You don't need all these 63 or 67.8, all the 38.2, you don't need all of that. Just make it as simple as 0, 50, 100. You don't even need to mark the 050. Don't let it show. Just make it as simple as mine, if possible. Okay. And then once you have identified this, wait for price. What did I say? Wait for price to come into your discount or into your premium zone. If you are in a bearish market, premium. If you're in a bullish market, discount. And then I will go to the next thing on the slide. The next thing on the slide says identify what? The order block or the fair value gap within the premium and discount zone. Okay, now let's go back to the chart. Okay, now I will not stress this because I stressed this in the first video. So I'm asking you again, go back to the first video and watch it. For every pump that you see in the market, it is usually sponsored by institutional buyers or institutional sellers. Okay, now because the institutions are in the market, you know what the institutions are? The banks, the asset and portfolio managers, large asset and portfolio managers. They're the ones that trade volumes and then they're the ones that drive the market. So what we are doing as retail traders is we are just leveraging on their own, what's it called, on their own activity to make money for ourselves. Okay. Now, institutional traders are usually in this kind of push that leads to break of structures. So before this break of structure happen, there's something we call an order block at this base. Okay. And then there's something we call a fair value gap that would possibly happen at this, as this price pumped up. Now, another block is of two kinds. I said that in the first video. There's a bullish order block and then there's a bearish order block. If price is moving upwards like this, you're looking for a bullish order block. Now, the order block is usually marked by a bullish candle engulfing a bearish candle. Okay, do you understand? Or a bullish candle forming very close to a bearish candle that led to a higher high being formed. Now, I will show you that in the chart when we go into that shortly. Now, for this push to happen and this break of structure to take place, there must have been another block somewhere here. There must also be a fair value gap that must created. Now, if you don't see this or you don't see this, then there's no entry. If I don't see the order block or the fair value gap being created, then I'm not looking for entries. I'm only waiting to see that there is, of course, a push into what? The order block, or a push into the what? Fair value gap, and then I am taking my what? Position. And then how do I know where? I'm looking only for price to come here. I hope you can see me. This is what? My discount zone. If it's here, I'm not interested. That means it's a missed trade. If it happens like this and it continues, it's a missed trade. I'm not interested. If it happens like this, yes, I'm interested. Right? Okay. Now, what do I do next? I jump to a lower time frame and I look for what? Lower time frame break of structures at the 1 hour order block that I have identified. Then I will look for entries at the retest of the 5 minutes or 3 minutes order block. Now, enough of those practice. Let's go into what has happened on gold in the last few weeks. Okay. Now, this is gold. First thing first, 1 hour time frame. Remember I told you gold has been what? Gold has been what? Has been ranging. Now, I want us to start from here. Okay. Let's start. Let's start from somewhere here. Or possibly we can even start from somewhere here. Okay, let's start from somewhere here. Now, look at this. Is there any clear structure here? Guys, what was the structure here? Can someone tell me? Like, what was happening here in the chart? Ranging. Yeah. Okay, I'll help you with Fibonacci settings later on. Ranging. Market here was ranging. There's really, it was bearish up until this point, correct? Right? Was sort of bearish. What's this thing doing like this? Was bearish up until what? This point. So we saw lows being taken out to create new lows, right? Can you see it? Right? Up until this point, where we saw this last low. Now, for this market structure to change, we saw a break here. All of this is not information that I want to trade, right? Of course, information that I would have loved to trade because, okay, look at this. This was a lower high that created this low, correct? Are you with me? Who's following me? Good. Now, when this lower high was formed, it created this low. What am I looking for? A reversal or a correction into what? my discount zone to sell, my premium zone rather to sell. Are you there? What happened with price? Here. Price did what? Price dropped from there. Was not a long sell, but it did what? It did sell. Can you see that? It was not a long sell, but it did what? It did sell. Now let's jump back to a 3 minutes or 5 minutes time frame. Now, what we have identified is this is our premium zone. This is our what? Discount zone. Price created a lower low, lower high, dropped into a new low, reversed, and what? Came into my what? Discount premium zone. Now, what do I need to identify in this premium zone? I said identify either the order block, which formed up here, okay, or identify the fair value gap, which of course there are two of them. Just a small one here if you see, right? And then also there's one up here. If you don't know how to identify order block fair value gaps, you might want to look at the video previously. Now, what happened? Price reacted at this first FVG, fair value gap here, and then started to sell off. Now, what do I need to do here? Let me take off this. Okay, let me leave it because let me just change the color. Yeah, very good. Now, what do I need to do when I've spotted this? Price has pulled back into this fair value gap. It did not test this other bigger one here, but of course, I'm in this premium zone. So I jump to my lower time frame. Okay, let's use 5 minutes. I jump to my lower time frame. What is it? It's going to be a bit foul. What date was that? Just hold on. What day was this? Thursday, July 23rd. Okay. 5 minutes. Jump to July 24th. July 23rd. Oh, July 31st. Sorry. July 31st. Sorry. All right. So we jump into July 31st. Good. Okay. Now, what happened here? Price has pulled into my premium zone. For the brevity of time, I think I will give one more example, take some questions, and then we'll stop. Okay, because I have to do something else by 1:30 and I have to prepare. But I believe you're getting some knowledge and getting some ideas of what I'm saying here. Now, this is price as we approached the premium zone. Okay, this was what happened in that box there. What can we see here? Structure, right? Are we together? Right? I won't call this a major structure, but for some reasons, I'll just mark it out. Okay. This was a major dump. Now, what happened here? Price kept pulling up, right, into this zone. Where was our major structural shift? Where was our major structural shift? This was a low, created this high. I won't consider this a because it's just a 5 minutes time frame, so it's not a major structure because this is more. So I would consider this a shift in my structure. Are we together? That was what? A shift. Okay. Now it means price was preparing to go bullish. It took out this last higher low that formed on the 5 minutes and then did what? Reversed. Now, what did I say you would look out for? A break of structure on the what? On the what? On the 3 to 5 minutes time frame. Then entries at the retest of a 3 to 5 minutes order block. Now, where was the fair value gap or order block that sponsored this break? Now, this break happened as a result of what? This major order block here. This was the highest order block that formed. Are we together? I hope you guys are seeing what I'm doing. Now, this was the highest order block. Now, this was an infrastructure, internal structure, and I'm not interested in this because this was more of what drove price down. Of course, you could have picked your entries. For those who have really could have picked an entry here, right? But for some reasons, when I see internal reversals or corrections like this before the major dump that led to the break of structure, I feel like it's liquidity and price has to take it out. Okay, but I'm not talking about liquidity today. I'm talking about just a simple strategy. So, but there was an order block up here. You see, it's more like a what? A bearish engulfing candle. Can you see it? This one here. A bearish engulfing candle. Now, that green candle, which is the bullish candle, is the order block that I have marked out for this. And then price particularly reacted from it. And then what? Dropped. So my entry will be what? Here. My stop loss will just be above here. And then I'll target what? The next low. It's as simple as that. And then I'm out of this trade. I'm not looking for too much. I'm not targeting this low. Even if price gets there, which it eventually didn't, but I am not interested in what? Anything that happens beyond that most recent low. Are we together? Is somebody getting this, please? Let me know in chat if you understand it or if you're lost. Who is following this? All right. Very, very good, Tabitha. Very good, Tabitha. All right, all right, all right, all right. Godwin, I see you all. Ismail Suleiman, I see you. Good. So now the idea is you're not looking for too much. That's the first thing as a trader. Don't look for what? Too much. Have a preset risk to reward ratio all the time. For someone like me, I use 1 to 3. Only recently did I increase it to 1 to 4 because I want something more. But always have a preset what risk to reward ratio. I'm not targeting too much. Or even if you don't have a preset risk to reward ratio, what is the next low after this has happened? And then I'm taking my trade from there. If you are taking your trade from here, you would have made money, correct? Sorry. If you have taken it from this other internal structure that I talked about, right? You would have still made some money, but you would have seen what? Some form of drawdown, correct? Isn't it? And then the risk to reward would not have been as appreciated as the first one. This is like a 1 to 9, which is not still very good. Okay, but of course, money was made. Yes or no? Yes. At the end of the day, money was made, but this drawdown is inevitable sometimes, but sometimes it's better that you sell from that particular order block that led to the break, not the internal structure, but the internal liquidity, but the main one that led to that break. I hope you understand what I'm saying. Now, this thing repeats itself every time, repeats itself every time in the market. Now, let me go back. I don't know who's doing this, but I trust we're rounding up already. So I'm just going to entertain questions. Now, this is the most recent market activity, right? As a trader, two things you should know. Always what? Manage your risks properly, and then always use stop losses. If you're here and you don't use stop losses and you trade gold, you are burning your money. You're just doing burnt offering. This is what? This is the most recent market structure on the 1 hour, correct? I hope you can all see this. Price is where? Price is currently where? In our premium zone. I hope you're seeing me. This is me trading on a normal deal. Okay, I'll take it back there. Chinedu, I'll take it back there. This is me trading on a normal day. Okay, I have marked out what? My Fibonacci level. I have identified my what? Premium and discount level. What am I waiting for? For market to pull back into my what? 1 hour OB or FVG, okay, in my premium zone, which because I'm looking for sales, and then sell gold back to the next low while I also wait for a lower time frame confirmation. Now, this jumping to 3 or 5 minutes is for confirmation, further confirmations, and also to ensure that my entries are what? Are as precise as possible. Okay. Now, I hope Chinedu has taken a screenshot of this because I'm taking it off now. Right? So, what am I waiting for? There's no fair value gap here. If you're following me, if you've been following my conversations this morning. But of course, something led to this pump. Are we together? What led to this pump? That other block there. So what am I waiting for? Price to come back into this point. Watch out. Okay. Break, retest, and drop. Did you get that? Who didn't get that? Who didn't get that? If you got it, let me know in the chat. That's my expectation on gold. Okay, anything apart from this, if I don't see this happen, this break of structure, the retest of that other block, I'm not interested in taking the trade. For any reason, if price breaks through this thing like a tornado, right? If it breaks through like a tornado, my bias changes immediately. To what? I'm looking for buys. Do you understand? I'm not going to sit with one analysis and think that, oh, because we are currently in our premium zone, then no. If I don't see my confirmation, price breeze through this place like a tsunami or like a whatever, a tornado, I am what? Switching my buyers immediately. My directional bias has changed to what? Buys. I'm looking for buys going forward. Do you understand? And then remember at the start, I said, I'm expecting gold to actually what? Continue up. But maybe not immediately now. But as we approach September interest rate decision, we will see a pump. Possible. Very good pump on gold. Do you understand? I hope you're getting this. I hope you're getting this. Let me know if you're getting it. Yeah, it has to retest. It has to retest. Do you understand? If it doesn't test here, okay, then you come to 5 minutes and see this. Please abstain. Do what? Abstain. Don't take a trade. Sit on your hands or go to another asset. This same thing works on different assets. I can go to other assets and show you, but I'm here to do gold and how you can actually trade gold. So, but you can use it to trade other assets as well. So once you see this, break above, break below, retest of that other block, then you can actually sell. What do you do then? Entry here, stop loss just above this, and target what? Descent 1 to 3. Maybe if price moves that way, and then you can actually stay off. And one important thing I want to say when you're trading gold is learn to always break even. Learn to always break even. Your floating profit of maybe 1 to 1, but you're targeting 1 to 3, or you're floating 1 to 2 and you're targeting 1 to 3. When you see 1 to 2, chief, market is not your father's business. It's not your, nobody your papa own the market. Break even and allow the rest to run to take profit. That way you know that even if it comes back to entry, you are not losing money. I don't know if you understand. Because I've seen some very selfish and how do I put it? Very, it's a different thing to get the entry. It's a different thing to manage your trade. So what I just talked about is trade management, right? That's how to manage your trade. You're seeing some profit already. Maybe price has gotten somewhere here. Why not break even and wait for markets to drop to your target? When it gets to your target, then you do what? Then you know that, oh, I took full 2p. But if you break even here and maybe even close partial, then you can continue the rest down to your target. Because if you see money in the market and you and eventually takes your stop loss, it means you're a fool. That's just what it means, right? So stop being that kind of trader. I've just showed you what you need to do or what you need to see on gold. Expect market to come back here. Expect this kind of reaction. You can make money off these trades. I will show you my own screenshot on our next chart, on our next talk. Do you understand? So if you have questions, I just want to entertain questions. Just 1 or 2 questions in the chat. 1 or 2 questions in the chat, and I will end this call. Okay, this is the Fibonacci settings. It's not difficult. If you're on trading view, this is it. Star, is it star? Yeah, this is it. I've only marked out 3 things. 0, 1, 0.5. That's all. Every other thing is just as it is. Okay, and that's what gave me this. That's the Fibonacci settings. What else? Who's asking a question? All right, David. Good one. Good one. Please throw more light on the BOS. All right. BOS is break of structure. Okay. Now, just I'll be rounding up this call. I've been notified already. I've been notified already. So BOS is break of structure, and then what it simply means is price creates a high, retraces, creates a new high, corrects, creates a new high. Okay. What's this? Okay, for every high that is created, we have what we call a what? A break of structure. Are we together? So this is what we call break of structure. When price takes out the previous high to create a new high, a break of structure has taken place. If it breaks a low to create a new low, a break of structure has what? Taken place. And then to round it up for today, I quickly want to share with us. Yes, analyze on the 1 hour and entry on the 3 or 5 minutes. Yes, exactly, Mishak. That's it. All right. All right. I would not entertain further questions because of the brevity of our time. But before I end this session, okay, I want to quickly share with you that at Tentrade, we are not just a brokerage firm. We are also very particular about our clients' education. Many brokers don't tell you, oh, we have a special strategy session on gold. They don't tell you, oh, come and learn how to trade the currencies. Nobody tells you that. They're all interested in what? Getting you to fund your account and probably losing the money at the end of the day. But we have traders here who do good numbers. Let me tell you a story of a woman. She subscribed to our diamond package. That was about a month ago. And then for some reasons, this woman took a $5,000 account. She took it about 7,400 just after taking a one-on-one session with our chief market analyst. So as I'm speaking with you currently, okay, I have people who I also sit down with to train one-on-one. Okay, and then you can imagine what happens one-on-one if this happens to everybody. Okay, and then for this month of August, we are going to be having a special VIP strategy session. This exclusive VIP strategy session is going to be coming up in August, this before the end of this month. Okay, and then the flyers are going to be out there. You can also benefit from this. We're going to be talking about a very important strategy that I have been using for the last 4 years. Okay, very good. Now, as a diamond member package, okay, which you need to subscribe to with $5,000, you have access to our breakfast and lunch sessions. You also have access to one-on-one, which I talked about, the exclusive session, which I talked about, and then you also have access to our trading indicators, VIP trading indicators, okay? And then we provide from time to time access to technical insight on high yield assets like gold and Bitcoin. Okay, what's happening on Bitcoin now? What do you need to do on Bitcoin now? I'm not going to share it on this call because some of you are looking for free information. Okay, access to technical insight on high yield asset like Bitcoin, UK, or US oil. You will get that when you are on our diamond package. We also have a lower package called the Ruby package. Okay, with $3,000, you can be a Ruby package member here at Tentrade. And what that gives you is access to VIP signals, access to our technical insight on high yield assets like Bitcoin, gold, UK oil, US oil, silver. It gives you access to VIP indicators. Also, you get VIP signals. Okay, VIP signals, very good. Now we have the gold package at 500. 500, very good. You will get access to some trade signals. Also, you'll get access to our live sessions, just the breakfast and lunch. And then if we have classes like this, you would also gain access to it. And then we have the list of them, which is $100 to $400. So if you're funding $100 today, or you're funding $500 today, or you're funding $3,000 today, or you're funding $5,000 today, saying, oh, I want to leverage on any of these packages, you can reach out to your account manager, okay, or reach out to any of our support agents or support channels, and they will guide you on what you need to do to benefit from this. Do you understand? Now, you can either make money or make excuses. The choice is yours. And then, like I told someone earlier today, I think I said The year is wrapping up. Have you met your goals? Have you met your targets? How much have you made this year? Those are the questions you should be asking yourself. Not asking yourself, when is Barca playing next weekend? That's Barca guys are getting paid, whether they lose their match or not. What's your business? Why not focus on your life? I hope you understand me. So the idea is we are very, very big on education. We are very, very big on ensuring that our clients are equipped to face the market. And then when you're equipped, of course, you cannot be sure that you would make money. And we have good hands. We have Lord Jules, we have PS, we have myself, we have Mr. Martins that can take you through all of these classes and then make you better, a trader. So reach out to your account manager, and then that will be all for today's session. I hope you enjoyed it. Let me know in the chat session. I hope you got one or two things. I hope you got one or two things. I hope you got one or two things. Yes, yes, yes. Godwin, Nixon. All right, all right. That will be the end for today's session. You can call me RSI, and then I'll see you during the VIP exclusive session coming up later this month. Okay, watch out for it. Watch out for it, guys. And enjoy the rest of your day. Watch out for gold as well. Don't forget what we talked about.